Hello everyone, good morning and welcome to my morning report analysis video. Today the 22nd of February with me, Rich Power Market Analyst at Antec Markets. We've got a sort of relatively positive start, certainly on the equity markets anyway. Wall Street continues to move to all-time highs, and we've now seen a big breakout on the DAX, which has moved to the highest level since April 2015, above 12,000. However, the big story of the day really is the euro and the euro weakness that we're seeing. Let me just show you a big important chart that I think is driving this euro weakness, and that's the spread between German and French yields. You can see that the German yields are tracking lower on the 10-year, the French yields are tracking higher, and that's coming as the political risk in the eurozone is increasing, sort of pretty much by the day, really. So the polls are sort of suggesting that the candidates, other than Marine Le Pen, are sort of faltering. And that means that the market is having to increasingly price in the risk of a Le Pen victory. So subsequently, you can see these bond yields diverging, and you can see they track pretty closely throughout the months of 2016. But now they're starting to diverge, and that's coming with the yield spread widening quite sharply above 80 basis points, and that is the widest since November 2011. On that German-French spread. So it is an interesting factor that the market is having to sort of take into consideration. Certainly the euro breaking down this morning. Dollar is mildly higher on that euro weakness, but generally dollar is fairly sort of mixed today. You've not got a great deal of direction, certainly on the 10-year Treasury yield. 2-year is higher, but not so much. But certainly I think the euro weakness is the main driver of this dollar strength that we've got today on the trade-weighted basis anyway. Other than that, we're seeing sort of, as I said, mixed outlook really across Forex, and the markets are sort of waiting now for the Fed minutes tonight. We've got Fed meeting minutes announced at 7 o'clock tonight, and that's the main focus I think for today. We've got the meeting last time out, or the statement was mildly hawkish, and Yellen was hawkish. Other Fed members have been hawkish since, such as Patrick Harker and Loretta Mester this week. But Neil Kashkari hasn't been all that positive, but certainly there is a suggestion that maybe the minutes could sort of allude towards a hawkish lean as well, maybe mentioning balance sheet reduction, or even sort of more members trying to sort of persuade for a rate hike. So it is interesting that we're seeing this coming up today, and the Fed meeting minutes were certainly this afternoon. Now, other than that, we've just had the UK GDP numbers out. UK GDP was upwardly revised, actually, for Q4. Upward revision for Q4 to 0.7%. So that is helping again to support sterling, but the focus for this afternoon would be on the US housing data at 3 o'clock, 5.54. It would be a mild improvement on last month, but the main driver of the day will be these Fed meeting minutes at 7 o'clock. So that takes me to my chart today, which is Euro Sterling. Now, I saw Euro Sterling last week, and it was it broke below this initial support at 84.67, and it was testing the key support at 84.45, which was that reaction low from January. Testing that level yesterday, and is seemingly, well, certainly on an intraday basis, broken down today. I'm thinking that little intraday rallies are now going to be seen as a chance to sell, because I think it sort of completes this top pattern. Certainly a close below 84.45 would complete that top pattern, and you've got the momentum indicators which are bearishly configured as well, and that would open 83 big figure. And look at the importance of 83 big figure. 83 big figure has been the sort of reaction low that has been the basis for support pretty much since Brexit, since that Brexit day. So that is a massive support, 83 figure area. So I think we could be coming back to test that now. We've had this intraday rally just in the last hour or so, as German IFO came out and suggested that Germany was again improving on the IFO statistics, but I think little rallies are going to be sold into. You're now back up to, again, the breakdown around 84.45, 84.67 is also resistance, and you've got a lot of overhead supply, I think, now that I think will contain this rally. I think we're now into sort of a sell zone really between 84.45 and pretty much 84.90, which has been a near-term pivot as well. So I think 84.45 to 84.90, I think that would be where we sort of see the next lower high, and I'd be expecting further pressure to the downside below 84.45 and subsequently towards 83 figure. So little sell into strength today on the euro sterling. So I wish you good luck in your trading today, and I will speak to you later. Thank you.